And we've got a good bit to discuss, too, as far as earnings, as far as stock stories go, as far as the momentum of the market from yesterday's move. Mr. Kevin Green was pointing out some very interesting chart work for us yesterday, including a bullish hammer and then engulfing candle in NVIDIA yesterday. That stock started off a little bit slow here at KG, but the market's got a lot ahead of it today. And we did see a bit of a sluggish start yesterday, too, at the open. In fact, we saw some early weakness and selling around the open yesterday before we ripped back. So it seems like we should take some time to settle in here. What's first thing on your list to look at?
Yeah, look, I think if we're looking at the intraday levels here, obviously we got to be mindful of them, but they can obviously break either to the upside or downside fairly quickly, just depending on what Chairman Powell is going to say. Now, typically what we would see going into a Fed meeting is actually a very compressed day, right? A 30-point, 40-point range-bound move either to the upside or downside. When you're looking at the absolute move to the upside or downside. And that's what I would actually kind of expect for today. So an inside candle for the most part, and then potentially a breakout to the upside or a breakdown to the downside here. I would say that the 61.30 level is kind of that area that I'm looking at as far as for the market to be able to achieve today. If we do get some bullish commentary from Powell, or if the commentary just comes in line with what the street's actually expecting right now, and any type of breakdown in the market, looking at that 50-day moving average is your first area of support. Next one's going to be the 20-day moving average, which also coincides with that downward channel that we had broken out of, but obviously came back and retested. So downside, I actually moved that negative gamma level to 5,900. And what we are seeing a little bit, Oliver, when it comes to positioning is actually a spreading out of these levels. So it's really trying to confirm that the market's really not expecting any type of real compression over the next couple of trading sessions. We are looking for a defined direction either to the upside or downside. And that's kind of being symbolized by those levels moving out. And really it's kind of that downside that it went from 6,000 going down to 5,900 here. Some interesting positioning when you're looking at the downside puts that are being bought today, but I mean, some of them have a 4 handle on them. I don't think that might be the case here, but you are seeing a little bit of hedging activity to the downside for the most part to start off the day, but volatility is still relatively cheap going into this report, not only on the equity front, but also when you're looking at Treasury vol. And so this is kind of just showing the levels today. 61.30 positive area, positive gamma pressure. That's where you're seeing a lot of calls being sold. 60.70 kind of getting, I think that's going to be more of like the fulcrum meandering point, if you will, going up into the meeting. And if we have any type of breakdown, looking at 6,000 as being that first level for buyers to kind of step in.
All right. So we are trying to fully close this gap, but we haven't quite yet from Friday into Monday. So what do they say? Gaps always get filled. Yesterday I described the bounce back as in some way one of those sort of like automatic days where your options are either break down catastrophically, which is just not a frequent occurrence, or you recover and you bounce. So to some degree, bulls kind of had to step in yesterday to prevent like a major drop off, like a VIX 30 type situations. But it also didn't mean that we had to rally as hard back as we did and almost fully close that gap. VIX down, to your point, below 17 again is kind of acting like DeepSeek was a little bug on the windshield.
Maybe a tiny bit. Obviously, when you're looking at the market weighting of a lot of the stocks that were advancing yesterday, that really drove the market higher, even though we only saw around 30%, 28 to 30% of the stocks actually in the green in the S&P 500. What I will kind of say, though, when you're looking at these gaps being filled, they say it's around 80%, 75, 80% of gaps do get filled eventually. And we already actually kind of back tested and filled 2 of them. If you're looking at the S&P 500 or the E-mini S&P futures here. So that's something to be mindful of. What we're kind of seeing here, 20 VIX calls are actually getting a little bit of a bid, relatively cheap. Last time that I checked, I think they're going for only about 85 cents to $1.20 if you're looking at the bid-ask spread. So there's somebody that's buying in a little bit of protection to the upside if we do see a little bit of a vol spike here. But, given the fact that we already had an aggressive sell-off in that last meeting, are we going to see the same type of effect today? That would be actually very surprising to me. Usually you don't see back-to-back 1%, 1.5% sell-offs because of a Fed meeting. So it kind of leans, once again, kind of a little bit more to the bulls, especially that hammer candle that we have on the S&P 500 from yesterday. Looking at the internals for the Mag 7 and the strength and the aggressive buying that we saw yesterday here. I would not be surprised today, Oliver, if we actually do make new all-time highs getting that 61.30 level. I mean, that seems like the trajectory that we're going to right now. That kind of goes counter trend to that vol argument that vol should be a little bit higher. And even though vol should be higher, doesn't mean that the markets automatically go down. But there seems to be already enough positioning here, especially on the Treasury front, when you're looking at Treasury vol being very low. This is probably one of the lower Treasury vols that I've seen going into a Fed meeting, regardless of if we have SCP or not for this meeting. So the market right now is saying, hey, we're bullish. We think that Powell's going to come in line, not really spook the markets. And if that's going to be the case, I think we rip higher. And then after that meeting too, then we focus on the mega cap earnings. And once again, we talked about this yesterday on Market on Close. What's the likelihood that you're going to see any major executive adjust their CapEx spend for this year or even next year when it comes to guidance?
It'd be suicide. That would be
exactly.
Yeah. Okay. So the anchor of big tech in the afternoon, I think, also is keeping that vol pinned lower, to your point, because the miss rate of these companies is so low that generally we should assume it's going to be a positive thing, unless otherwise, barring some unforeseen incident. As far as the bond vol goes, too. Given the conversation with Danielle there, it does kind of seem like we are in a little bit of a kind of lull for like Fed uncertainty, where we've kind of got the idea. Nobody expects them to do anything today. Some people expect them to maybe do something by March, but with so much swinging around right now, policy-wise, market-wise, March seems like a long ways away. So, at least that's kind of my opinion. It's only, a month and a half or whatever. But love the context on the charts and the strength in the charts. Appreciate it, KG. Maybe some seasonality for vol, suggesting VIX should be a little bit higher. But we've got big tech firming up from yesterday. Makes sense. Market's looking pretty firm.